If you pay all your bills on time, have savings, and never miss a payment, your bank actually doesn't like you. In fact, inside the banking world, you're called a problem customer. And today I'll explain why having $50,000 saved makes banks uncomfortable and why that's a good thing. Most people think banks love responsible customers, people who save money, people who pay credit cards on time, people who never overdraft. That sounds logical, but the truth is the exact opposite. Banks don't make real money from responsible people. They make money from stress, mistakes, and debt. Let me explain how the system really works. The hidden label banks use. In normal life, someone irresponsible is called a deadbeat, someone who avoids paying bills. But in the credit card world, the meaning flips. A deadbeat is someone who uses a credit card but never pays interest. You swipe, get rewards, and pay the balance in full every month. From the bank's point of view, you're using their system for free. And banks hate free users. Why banks prefer struggling customers? Inside banks, customers are split into two groups. Transactors pay the full balance every month. Revolvers carry debt and pay interest again and again. About half of Americans fall into each group. But here's the crazy part. Almost all credit card profits come from revolvers. People carrying debt month after month. Responsible users? They generate almost nothing. So if you're organized with money, you're not valuable to them. You're invisible. The math that explains everything. A massive study of tens of thousands of bank customers found something shocking. Almost half of customers bring in zero profit or actually cost the bank money. Meanwhile, just a tiny percentage of customers create most of the profits. Who are they? Not rich people, not savers. They're people who overdraft frequently, carry credit card balances, pay late fees, take high-interest loans. A customer who overdrafts often can generate hundreds of dollars per year. A customer who never overdrafts? Barely anything. That's a 10x difference. Why your savings are a problem. Now let's talk about you. Say you have $50,000 saved. You don't overdraft. You don't pay credit card interest. You don't need emergency loans. You don't miss payments. To a bank, you're a terrible business deal. They still have to maintain your account, pay you interest, hold reserves against your money, and they make almost nothing back. From a profit perspective, you're dead weight. The broke tax nobody talks about. Here's where it gets uncomfortable. People with unstable finances pay a hidden tax, overdraft fees, high interest, penalties, predatory loans, lower income. Households spend a huge chunk of their income just staying afloat financially. Meanwhile, financially secure households pay almost nothing. Same banks, same products, completely different outcomes. The system quietly pulls money from people who can least afford it. Why banks push credit, not savings? Ever notice something? Banks advertise credit cards, personal loans, buy now, pay later, but barely promote savings accounts. Why? Because savings cost banks money. Debt makes banks money. They might pay you less than 1% on savings, then charge 20% plus on credit cards. That gap? Pure profit. Your savings reduce their power. What $50,000 really gives you? Freedom. You're not desperate. You can walk away from bad deals. Immunity. Overdraft traps stop working. Minimum payments don't matter. Emergency debt disappears. Invisibility. You don't fit their profit model anymore. And that's exactly where you want to be. Being boring to your bank means you're winning. The truth about the banking system. Banks don't profit from stability. They profit from uncertainty. Someone else pays for free checking, cashback rewards, fancy bank branches. That someone is usually struggling. When you build savings, you quietly step out of that machine. How to become the customer banks dislike. Build an emergency fund. Pay credit cards in full. Avoid overdrafts at all costs. Stop relying on high-interest debt. Use high-yield savings, not big banks. Every dollar saved is one less dollar they can extract. Final message. Banks don't fear rich people. They fear prepared people. $50,000 in savings doesn't make you special. It makes you untouchable. They might label you a problem customer. Good. The goal isn't to impress your bank. The goal is to be so financially stable they can't profit from your mistakes. Be boring. Be prepared. Be unprofitable. If this helped you understand how money systems really work, hit subscribe. Comment below. Are you building your safety net or still stuck in the cycle? Go secure your future. See you in the next one.